Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my North American opening market comment for Wednesday, August 24th. The dollar is generally weaker at midday in Europe compared with its opening levels. The only major currency that it gained against was the euro, although even there the movement was pretty small. The euro's weakness wasn't caused by any negative reassessment of the outlook for Europe. On the contrary, European stocks were generally higher. Now, the pound was up as UK loan growth in July rose the fastest in almost a decade. Mortgage loans were down a bit, but nothing dramatic. The figures show that borrowing hasn't been hurt significantly by the Brexit vote, which is bullish for sterling. With sterling speculative shorts at a record high, news like this showing that the UK economy is still doing okay is likely to boost the pound further. As for today's U.S. indicators, existing home sales are forecast to be slightly lower than in the previous month, but first off, remember that the previous month was exceptional. Existing home sales hit a 9-year high. Moreover, that forecast of fall was made before analysts knew of the jump in new home sales during the month, which was announced yesterday. If existing home sales do slow, it may actually be because real estate agents don't have enough homes to sell. In any event, even a small fall from the previous month's levels would still be quite a healthy level and should be supportive for the dollar. The weekly U.S. oil market inventory and production data has been roiling markets recently. As the graph below shows, the seasonal buildup in inventories in the beginning of the year was fairly normal, but the subsequent drawdown was much shallower than usual. Now, the seasonal drawdown period is almost over, and we're entering into a period when inventories usually rise. But with inventories already at unusually high levels, this may pose a problem: where to put the oil. Now, the market's looking for only a small decline in oil inventories, probably not enough to boost prices. Moreover, the American Petroleum Institute yesterday reported a huge 4.5 million barrel increase in inventories during the week. That makes it unlikely that the U.S. Department of Energy will actually report a decline. Analysts look for an even bigger decline in gasoline inventories, which has been one of the focal points of attention recently. But still, they expect less of a decline than last week, which isn't a good sign. The API, on the other hand, yesterday reported a huge decline. Now, I expect that if the data does come in as expected, it would be a negative for the oil market. That might also be a negative for risk assets, which nowadays includes the dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.